Okay, today we're looking at Tesla and we're applying the square of 9 to Tesla. And we're only showing you the 360-degree lines. So these lines here, 360 degrees at 371, 298, 233, 176, 127, 86. Where does that come from? It comes from this chart. This is the square of 9. So if I were to expand out, you'd see more numbers out here, but I'm just showing you 86, 127, 176. So if we go back to the chart, you can see 176, 127, 86. Those are the lines that we're concerned with. Why? Because Tesla tested this support here twice. It bounced off it. Today it's up at 178. Maybe it might get back to 191 to retest the October 30th low. You know, if it gets up there by Monday, the 11th, and then hesitates and starts to sell off, what you'll want to do is watch for close below 176 to confirm that it's going down to 127 or 86. When will it get there? Well, that's the virtue of the cycles. Remember, you don't trade just with the cycles. You don't just trade with price support and resistance, the Gann lines. You use both together. So a close below 176 sometime early next week will confirm that you're probably going down into the 27th, which is 90 degrees or 90 solar degrees down from high. And remember, solar degrees is very similar to calendar days. There are 365 calendar days in a year, but there are only 360 degrees, solar degrees in a year. You think about a circle, it's 360 degrees. It's not 365, it's 360. So it's going to be slightly different from calendar days. And I can show you that here. If you look at calendar days, what you're looking at is 90.8 solar degrees or 90 calendar days. Almost the same thing, but slightly different. Sometimes a market will vibrate to calendar days. Sometimes it vibrates to solar degree counts. So I look at both. And I also look at trading days. So if you recall, trading days on this software, if we go back, you can see bars. Bars is actually trading days. So 61 bars, in this case, we're looking at a daily chart, so that would be 61 trading days. Just over 60 trading days. Gann looked at both. You look at trading days, you look at calendar days, and like I say, you look at solar degrees. So from this high to this low, that might be a bottom. If you get down here and find support at 127 toward the end of March, hey, maybe that's a buying opportunity, or maybe you cover your short, whatever trade you happen to be doing. Now, if it takes this out and it keeps going down, maybe you look at 86 because that's key support. Again, these are cardinal levels. Anything that falls on the iron cross, which would be, north-south, east-west axis, any of these numbers that are on the iron cross are considered cardinal levels. So 176, 127, 86, those are key support levels on the way down. When you take out 176, in theory, you go down to 127, 86, or even 53. So we're going to keep an open mind for now. Remember, if you watch CNBC, you listen to the opinions of so-called experts who want to tell you what they think is going to happen. That's a load of hogwash. What you should be doing is looking at the chart and letting the market tell you what it wants to do. When you close below 176, that's the market telling you it's going to go down to 127. So you can see this thing vibrates to the square of 9. Here we have a high at 298. Here we have a double bottom at 176. And you can see it got close to that same level back here. Here you had a direct hit at 233, bounced off it, went higher. So the concept here, you may not be familiar with the square of 9, but the reality is when it vibrates to these levels, you want to go the other way. So when it bounced off this level here, you wanted to buy it for a move up. And in theory, if you take this out, you close below 176, you want to sell it for a move down here or down here. And you have to keep an open mind. When is it going to bottom? You don't know. It could be March 27th in sync with the 90 calendar day count down from high. It could be March 19th in sync with the spring equinox. And the nice thing about the spring equinox, 127, remember that number? If we go back to the square of 9, notice that 127 lines up with March 21st. Actually, this year, the spring equinox is March 19th. So if you see Tesla get down to 127 by March 19th, that might be some sort of low. Same thing would be true at 86. It's not the price that matters. It's the fact that these numbers are in conjunction with March 21st. That's what matters. You want to buy or at least close out your short if you see it bouncing off 127 or 86 on March 19th, because that would indicate at least a temporary low. It doesn't guarantee that that's the final low. It just tells you it's probably some sort of low. You could bounce back, a dead cat bounce, and maybe take out 127, go down to 86, or take out 86 and go down to 53. So we don't know. That part we don't know. We're just saying these are levels you want to keep in mind. 176, 127, 86, and 53, because they're all possible lows for Tesla. And if we know that, we've had some bad news about Tesla, eco-terrorists are blowing up facilities in Germany. And you can imagine if they keep doing stuff like that, it's going to be very costly for Tesla. But I'm not concerned with the fundamentals. I'm concerned with what the chart, with what the stock actually does in relation to the square of 9. Remember, you can listen to all the idiots on CNBC you like, but they're just talking out of their hat or somewhere lower on their anatomy. But the reality is, with the Gann charts, it's not a forecasting tool so much as you're just listening to what the market is telling you. For all I know, hey, this bounce is a big bounce. It's going to go well above this to 233 or back to 298. You don't put on the trade until you take out 176 on a closing basis. You have to close below this to indicate that you're going down here. For all I know, you're not going to stop at 191. Maybe you go to 233. That's possible. You're listening to what the market gives you. You're not telling the market what it's going to do. That's the difference between a Gann chartist and a fundamentalist on CNBC. A fundamentalist will just throw out his opinion, and it's worth nothing. But the Gann charts are based on what the market is telling you it's going to do. That's why it's important. That's why you should turn off CNBC and turn on your Gann charts. I'm saying that this is incredible support here at 176, but if it gives way, you're in trouble, big trouble. So it could bounce, it could find support on the 19th down here. It could be on the 27th in sync with the 90 calendar day count. It might even be all the way here, April 11th, in sync with a 144 trading day count, or maybe April 14th, 270 calendar days, or the 15th would be a Monday, so that would be 271 right in there. Or it might be all the way down here. 1 year anniversary of this low to this low would be April 25th, 365 days. So keep an open mind when it's going to bottom. What you're trying to do is isolate a time and price setup. You don't want to have a hard and fast view on this. What you want to do is listen to what the market's doing when it gets to these levels. I don't know for sure that it's going to bottom at 127. It might be 86. It might even be 53. All I know is if it takes out this level, it's probably going down here. If it takes out this level, it's going down here. And what I do have an advantage is that I take cycles seriously, unlike fundamentalists and trend followers. Cycles are very important. That's the key tool for Gann. When you combine the cycles with the price support, you have the potential for a reversal in trend. You bounce off 127 on, let's say April 11th in sync with 144 trading days down from high. That's a time and price setup for a reversal. That gives you more confidence to buy Tesla, knowing that, hey, if time and price are in alignment, you've got a better chance that, hey, it's going to reverse for real. And you know where your stop loss is. It would be just below 127. Same idea would be down here. If it were April 25th and you're all the way down at 86, that's a pretty wicked sell-off, but it could happen. And if it does, and it bounces off this level in sync with the 1-year anniversary of low, then you know you should be buying with a stop loss just below 86. So that makes it easy to figure out what you're going to do. It's not that you have a master plan. You have to admit what you don't know. You don't know exactly what the stock is going to do, but you do know what to listen for as you get closer to these cycle dates, and you know what price level to watch that will confirm that you're starting a big move down. So that, I hope that's been helpful. If you find this useful, think about a 3-month trial subscription. Register to the website, hit the shop button. You'll find that it's worth it. I do have an offer for new clients. You get the service at a discount. Check it out. Register. You'll get that coupon code. And then if you decide to do the 3-month trial subscription, hit the shop button. Appreciate your time. Thanks for spending the time to watch this video.